Good morning, everyone. I'm third reporters, and the topic is all about variance analysis. So, variance analysis is a financial management technique that involves comparing actual financial results and to, to budget and expected results to identify differences or variances. So, this analysis helps organizations understand why their financial performance may differ from what was planned and allows them to take correct actions. So third one is variance analysis is commonly used for budgeting and cost control. So for example, is if you planned if you planned if you planned your sales to be 50,000 and the actual sales was 35,000. So the variance analysis will show the difference of 15,000 minus, which is unfavorable. So your plan was to sell 500 items for 50,000. So the standard price per item was 100,000. So for you to be able to get the target sa 50,000, so per item is ibaligyan mo siya og tag 100,000. So is that clear? So okay, let's proceed. So here's how the variance analysis works. So first set a benchmark. So the first step in variance analysis is to establish benchmark against which you will compare actual results. So second is to calculate variance. Next, you calculate the variance, which are the differences between actual results and the benchmarks. So 2 points of this one is the favorable variance. This occurs when actual results are better than the benchmark. Second, or the B, is an unfavorable variance. This occurs when actual results are worse than the benchmark. So the third analysis variances. Once variances are calculated, so the next step is to analyze them. This involves investigating the reasons behind the differences between actual and expected results. So the fourth is take corrective actions based on the analysis. Organizations can develop actions plans to address the variances. So number 5, communicate results. So effective communicating of variance analysis results is crucial. It is important. No? So it is vital. So number 6 is continuous monitoring. So variance analysis is an ongoing process. Why it is called as ongoing process? Because it is a method. Because it is a method. It is called ongoing process because it is a method of assessing the difference between estimated budgets and actual numbers. So it is quantitative method that helps to maintain better control over a business. So let's proceed to the common variance analysis application. So revenue, number 1 is revenue variance. Revenue variance analysis compare actual revenue to budgeted revenue. So identifying the factors driving differences in sales or pricing. Number 2 is expense variance analysis. Examines variances in operating expenses such as labor, materials, and overhead costs, control expenses, and improve cost efficiency. So expense variance analysis is given that can include labor, materials, overhead costs, to control expenses, no, para dili mo hantong sa overcost, para na siya efficiency in terms of control sa business and sa pag-manage sa atong mga business. Then the third one is the profit variance analysis. So analysis of variance is overall profitability by comparing actual profit to budgeted profit, helping to identify areas of concern and improvements. So profit variance analysis is important because not necessary when siya crucial. It's because of its rule, no, sa pag-abot sa variance of analysis, no. It's because di na to mag-identify ang mga areas kung aha na to i-consider as mga pros and cons in terms of improvements and concerns sa atong negosyo. Then the volume variance analysis, so separates variance into components related to changes in sales volume and or pricing, aiding in understanding the drivers of revenue and profit changes. So volume variance analysis separates sa kanang components related sa changes. It's because di natin ma-determine if ang volume or ang kadaghanon or ang price ba is makahatag ba sa ato enough na kita ingana ba kay once nabay time na kanang daghan ba kayo nga atong i-order or daghan atong stock is daghan ra. Ang isa pang concern nimo pag pricing po, what if sa pricing kung sa kadaghan niya ma-push ka or ma-force ka para i-ikuni siya nga price, what if let's say for example nang kinakompra and then let's say tubig nakakompra ka at 50 bottles, so nakabalo ka nga ang overpricing is medyo kung siya dili siya kayo crucial in terms of working. Posible siya di mahalin. So kung sa imo ha analytic decision na either mahalon ba nimo siya or baratugon ba nimo siya as long as mahalin siya. Pero as ingon sa number 4, volume variance analysis, no, dapat imo siya part sa imong concern ba mahalin ba siya sa mahal nga presyo or barato nga siya. So number 5 is time series analysis, looks at variance over multiple periods to identify trends or recurring issues. So time series analysis, it is essential, no, para makabalo ka product or kanang services is kanang sabay ba sa trend. Okay, what if wala siya sa trend, so it may allows your business to para mahila siya nga. So that's why time series analysis is important sa kaning applications, because part siya sa imong concern and improvements nga ang naitutukan. So that would be all. Thank you.